can scramble to file before the tax deadline, millions will inevitably pay untold billions of dollars to the government. Surprisingly, money that many may not even owe. Tax expert Daniel Pilla says the federal government often looks to the Internal Revenue Service as a first line of attack in balancing the budget. With all the forms and deductions, it can be overwhelming for the average American to file without an accounting degree. Charitable contributions, small business claims, and unusual medical expenses are just some of the deduction options that can save you money, but can also attract unwanted attention from the federal government. That's why Pilla wrote the IRS Problem Solver. In it, the litigation consultant outlines 5 simple things to do before April 15th. Relevant steps that could save you time, money, and give you a whole lot of peace of mind.
Well, the man who knows more is reported than the commissioner of the IRS. He's here with us. Dan, good to have you.
It's good to be here, Pat. How are you?
Fine. Hey, listen, what are these tips? What should people know? The deadline's 1 week away. What should they do?
Well, a couple things. First of all, if you're making charitable contributions, and of course most Christians are tithing, as they should be,
right.
If that's the case, then you're making charitable contributions at about 3.5 times the national average. And so right off the bat, you're attracting a little attention to yourself. Not that you shouldn't tithe, of course you should,
yeah.
But what you want to do is audit-proof that tax return, which means that you provide information with the return, Pat, that answers any potential questions raised in the return, and that way you avoid a face-to-face audit.
You actually send that in with your...
Send it right in with your return. And not only do you do that,
yeah.
but you use a form that the IRS doesn't like to talk about. It's called a disclosure statement.
Right.
It's Form 8275. That's 8275. And that allows you to provide information with the tax return that answers any potential questions raised in the return. And that way you insulate yourself from a face-to-face audit.
So if one of those faceless checkers is checking, he sees that and he says, okay, this guy's cool, and he lets it go through.
That's absolutely right. Yep, because what we've got is, plus or minus 130 million tax returns that are filed every year, individual tax returns.
Right.
About 25% of those returns are claiming tax deductions of some kind, not just a short form. And so the IRS obviously can't look at every single one of them. There's no way. They have to narrow down the returns that they look at, and they focus on those returns that have potential for change. In other words, which ones can we make more money off of in the audit process? And if you inform the IRS on the front end that, hey, I got the proof for my deductions, this tax return is correct, they have to move on to the next guy.
What else should somebody be looking at in addition to charitable?
Well, in addition to charitable contributions, we want to talk about proving those deductions, because there are documentation that's required, and if you make a contribution of more than $250 to any one charitable organization on a one-time contribution, you have to have an acknowledgement back from that organization. So make sure you got your paperwork right, and it's referred to as a contemporaneous acknowledgement. And what that means is you got to have the acknowledgement before you file your tax return.
Well, say you get your acknowledgement afterward, you lose your tax deduction.
You potentially could lose the tax deduction, Pat. I've seen people that have gone through audits where they've gone back, let's say, a year later to get their paperwork in order because they didn't have it at the time the return was filed, and the IRS will disallow the deduction. They certainly can do it.
So all the charities, if you give $1,000 or $500 or whatever, they need to give you a letter that says, we thank you, you've given us the money, and you didn't get anything in exchange.
That's the key point right there. You didn't get anything back in exchange for your gift, because if you did, you can't claim a deduction equal to what you've gotten back, the value of what you've gotten back.
What about travel? People, that's kind of an amorphous thing, people traveling back and forth. How do you prove that?
Well, that's a good question, because that's what I call an intangible item. It's an item that you're not necessarily going to get a receipt for. Now, obviously, if you buy a plane ticket or you rent a car, you get a receipt for that. But in addition to proving the actual expense, Pat, you have to prove a business purpose. So in other words, you've got to demonstrate that the purpose of your travel was business related. And there's only one way to do that, and that's with your own detailed explanation. I refer to it in the IRS Problem Solver book as an affidavit, which is a detailed letter of explanation that you have notarized. And that provides the additional information, the intangible information.
You do an affidavit yourself, say, I went to Caracas because, I wanted to sell grapefruit or something.
Oh, yeah, absolutely. I mean, let's say you go to a trade show in Las Vegas.
Okay.
Well, of course, the first thing the IRS is going to think, you went to Las Vegas, you went on a gambling junket. You didn't go on a business trip. So you've got to explain to the Internal Revenue Service what the business purpose of the trip was, why you went there, what the nature of your business was, how that trip help your business either through marketing or through making contacts with potential customers, those kinds of things. You got to be specific about.
Include that with your taxes.
If you audit-proof the return correctly using the strategies I talk about in the IRS Problem Solver book, you're going to provide that right with the return, and that insulates the return.
All right, I am a great fan of asking for an extension, and there's an automatic extension you get. Tell us about that.
Yeah, there is an automatic extension that gets you more time to file the return.
Right.
All right, that's Form 4868, 4868. You don't even need a reason, Pat. If you can't get the return done in the next week.
That's me. I don't have any reason.
No, I just don't like to file. It's a matter of religion with me. I like to get the extension too. But the thing is this, here's where people get tripped up. You get an extension of time to pay, to file the return. That's true. It gets you till October 15th. But that's not an extension of time to pay the tax. The tax is still due by April 15th. And so if you're a person that can't pay by April 15th, and there are millions of folks out there that can't pay their taxes on time because of the financial crisis, any number of reasons, they've lost their job, a failed business, you know, the natural disasters we've had in this country in the last year, all kinds of reasons why people are behind financially. That filing extension, 4868, is not going to help you. All right, because the tax is still due by April 15th. But there's a secret that the IRS doesn't talk about. I talk about it in the book, The Problem Solver, and that is Form 1127. Form 1127 is called an application for an extension of time to pay the taxes. And if you file that form by April 15th, you can get up to six additional months to pay the taxes without penalties.
Without reason? You have to have a reason.
You got to have a reason. Absolutely. This is not automatic, right? And you have to demonstrate, Pat, in the form, there's a place to explain your situation there. You got to demonstrate that you did the things that a reasonable person would do. In other words, you weren't derelict in your responsibilities, but due to circumstances beyond your control, you couldn't pay on time.
Well, Dan, there's one other thing that you pointed out that I think is so important, is that the opportunity to put money in an IRA, tax deductible IRA by the 15th. Tell us about that.
Yeah, well, that's the only thing you can do now to save money for your 2012 taxes. You know, the 2012 year is long gone, as we know, but if you make a contribution to either a new or existing IRA by April 15th, you can designate that contribution to apply to the prior year, and so you can get a tax deduction for 2012, even though you're
open a new IRA before the 15th.
Before the 15th.
And fund it out of 2012.
You can fund it and designate that funding to apply to 2012.
And how much do you get now?
Well, you can get a maximum of $5,000. If you're 50 years of age or more, then there's what they call a catch-up deduction, which is an extra $1,000. So if you're 50 or more years of age, you get a $6,000 deduction. Under 50, you get $5,000.
Your spouse gets another one?
If she's got earned income, the spouse can get one as well. Yes,
that's huge.
Yeah, it's a big deal. No
$30,000 to $40,000. I mean, percent tax bite.
Absolutely, it's a big deal. No question about it.
And anybody can do that.
Anybody that's got earned income can do it. Wage income, business income,
What's
that sort of thing.
cutoff?
Well, there's what's the cutoff? You got to have the chart in front of you to answer that question. There's a graduated scale, and it just depends on your filing status, and it depends on your age, and it depends on if you're covered by another retirement policy at work, and there's all kinds of things. But I will tell you this: you can get IRS Publication 1717. Then there's a chapter in it that shows you what the chart is.
It's complicated,
isn't it? It is, and it's getting worse every day. I mean, that's one of the biggest problems we have with the income tax. Every single year, the National Taxpayer Advocate produces a report on what the problems are that people have, and number one on that list every single year, Pat, is the complexity of the tax code.
I used to do my taxes. I never do my taxes. I don't know what to do. I mean, it's in the hands of an accounting firm.
Well, I'll tell you something. We've got, as I said, about 130 million individual tax returns that are filed every year.
Yeah.
About 60 or 65% of those returns are either prepared by a computer or by a tax pro. And so fewer and fewer people every year are going it alone. But on the other hand, the IRS assesses more and more penalties every year, Pat, and this is something I talk about in the book as well. Last year alone was the highest year I've seen in the 30-plus years that I've been paying attention to this issue. More than 37 million penalties were assessed by the IRS against individuals and businesses. And, Pat, there's only 130 million tax returns filed. So that's about, 1 out of every 4 people getting hit with a penalty of some kind. And what the IRS doesn't tell you is that every single penalty provision in the tax code can be canceled if you can show that you had some reasonable cause for what you did, that you didn't just try to cheat on your taxes.
Boy, It's complicated. Ladies and gentlemen, that's why everybody wants to do something. But Dan Pilla has written a book. Where do you get it? Anywhere?
Yeah, the book is available anywhere. The best way to get it is to go right to your website, cbnnews.com. There's a link there where folks can